Could tariffs make your house actually worth less or make the mortgages more expensive? Here is the part most people are missing. Tariffs don't directly crash the market. However, they do affect jobs, inflation, interest rates, and consumer confidence, and that affect our housing market. So let me give you 5 things Ontario homeowners, buyers, and investors should watch for the rest of 2026. Number one is jobs is the biggest risk factor. Ontario is heavily exposed to manufacturing, automobiles, steel, and cross-border trade. Think of it as a chain reaction. If tariffs go up, it increases business cost, which means weaker exports, slower hiring or layoffs, less consumer confidence, fewer people qualifying for the mortgages, and weaker housing demand. So don't just watch for the tariff percentage, watch Ontario job number, especially in manufacturing and auto sector. Number two is buyers may stay on the sidelines. That is buyer psychology. When people hear tariffs, inflation, recession, many buyers simply say in their mind, why buy today? Maybe the prices will be lower in next 6 months. That creates a wait and watch approach. Buyers want better pricing. Sellers don't necessarily want to reduce their prices. Investors, they're looking for stronger cash flow. And the first time buyers are asking, can I actually qualify? That means more negotiation power can further shift towards the buyer. Number three, new home construction could be more expensive, but builders may build less. Number three is kind of very interesting because tariffs can increase the cost of materials, equipment, and development. That can squeeze the builder's profit, making the new construction more expensive. But here is the twist. If buyers become more cautious, builders may delay their projects or reduce the construction. So in the short term, you could see incentives and discounts by the developers or the builders to move their inventory and take advantage of HST rebate, which is there till next March end of 2027. But in the long term, less construction could further mean future housing supply issues, and that could put further pressure on the prices when the demand eventually returns, which could be 48 to 72 months down the line. Number four, what happens to the mortgage rate? Tariffs create a strange push and pull. Higher import costs can increase inflation, which can make it harder for the Bank of Canada to cut the rates. But if tariff slows down significantly, economy slows down, that could eventually create pressure for lower rates. So don't assume automatically tariff means mortgage rates are coming down. For homeowners renewing their mortgages, your renewal rate, monthly payments matter more than the Bank of Canada's headlines. And also the lenders could become more cautious about income stability and qualification in certain sectors which are directly hit by tariff. And number five, which Ontario cities could feel the most pain are more vulnerable? It depends on the location. There are Ontario communities with very strong exposure to manufacturing, automotive production, and trade could feel employment-related housing pressure more quickly in those towns and cities. And that includes major southwestern Ontario cities, example Windsor, Brantford, Barrie. They are very much relied on cross-border tariff. And Hamilton also has steel plants which could also affect those communities because of the auto industry. And also the most vulnerable is GTA condo market. We see vulnerability in their supply is increasing this year, and builders also are giving lot of discount. So it further put lot of pressure on the pricing of the condo. At the end, is this the prediction that Ontario real estate market is going to crash further with the recent tariffs? My thought is no, it is not going to crash. The more likely scenario for the rest of 2026 is a buyer-friendly, negotiation-heavy market with prices remaining relatively flat to modest declines rather than collapsing. So the biggest wild card, in my opinion, is jobs. If employment hold up, Ontario real estate could be, dragged through or muddled through this, uncertain time. If employment rise sharply, the housing downside could become much bigger. So if you're buying, selling, or investing, or renewing your mortgage in Ontario, don't make your decision based on tariff headlines alone. Watch for job numbers, mortgage rate, inventory, and affordability in your neighborhood. Follow me for straight talk in Ontario real estate market and mortgages education. My name is Singh. I'm broker owner with Fortune 2 Realty. Thanks for watching.